Hey everybody, welcome back to Markets for Millennials. This is the weekly update from October 4th through October 8th, and we'll just jump right in onto the DXY. And the last time I made a video, which had been the first time in about a month or so, I had talked about how over the previous weeks I had adjusted my ascending trend line to account for this move, because originally my trend line was something like that, and it didn't really work out because we broke through and then we broke back up above and then broke back down. And so it didn't look right to me, so I had moved it down because I feel like this is what the market's respecting. Um, and as I look at it right here, I'm just wondering, I'm doing this in real time, just wondering if any of these lines work out. You can actually see that you have this ascending trend line as well. We have not come up and touched. Um, so that's something I'm going to keep to the side right now. But I had also talked about how I added this trend line touching, or with these two touches. And when we last looked at this chart, we had just put in these two red candles, and I had suggested in my previous video that we would actually come down and actually really and legitimately touch this trend line. And because of our daily close where we had it, I think maybe I'll just put this right there. But I'm going to go back and I'm going to show you what I mean by that. I had this trend line and I said we were going to come back and touch it. So let's just take a look at that spot right now. And so you actually see there, that's exactly what I was talking about. And it looked as if, at least for a couple of days on Wednesday, that we were going to see that resumption up. We had this big green wick come up. We did not make a higher high, though, from this red wick right there. We actually bounced up. And so far, we're making a lower high. And so, the what we're looking at right here is something resembling this right now. And so the question is, now that we've popped above this resistance level, which was based off these two touches, but I think I said previously that if you clone this line and you bring it over here, you actually can see it. It does at it looks like it could work a little bit with maybe a little bit of adjustment. You can kind of see it right there. But anyway, the case may be, I know it's probably not the greatest line, but it looks like the market is respecting it right now. And so it could be that we're about to put in this kind of pennant. It could be, if the price action's like that, it's a pennant. If it, is parallel down, then that's a flag. Um, but the one thing to watch out for is that I think I mentioned this last week also, that we had this we have this horizontal level that we have traded under since basically July 23rd or so of 2020. We have not broken above that. So that's going to be a key horizontal level. You can actually look back. This was the level that we tested during the March crisis of 2020. I think that's an important level. If we get above 90, it's at basically 94.70. And if we get above that, then I think that we're going to see potentially a prolonged, I think as long as we close above it for at least a week, then we'll have prolonged dollar strength to the upside. But until it can, and I've heard this on the Macro Voices podcast as well, but until we get like a long period of closes above that level or below, around 89 level, 89.30-ish, then the dollar is still in this no man's land. And so that's something to watch out for. And always important to remember, the dollar it's the U.S. dollar weighted against a basket of other currencies, the highest percentage being the euro. So it's not just about whether or not the dollar is being devalued, but also about what the other nations are doing, particularly in the ECB, as well as in England and Japan as well. So that's what's going on in the DXY. My suspicion is because we did not get a solid resumption to the upside, and that we are under this resistance level. I actually would not at all be surprised if the next 5 candles are still in this range. Could be totally wrong. I'm totally willing to own that, but I'm going to put this circle there because if next Friday will be what is next Friday is going to be the 15th. So right here, if we're not like right in the middle of this range here, then that's going to obviously be the clue that I was wrong. So that's the dollar yields. I talked about this on Twitter. I wish I had pulled up my Twitter posts. I didn't think to do that, but just to get a big picture view, this right here we have my trend line, which we are above now. Um, I put this trend line in early on, or I'm sorry, late in 2020, and it has been confirmed almost all year. We broke below it. I talked at length about it previously. Um, what has been the more prevalent trend lines have been what initially was this flag that I made, which was basically right in here, and that obviously was broken through, and then I started cloning these lines. We had this little period of time where we were creating a kind of wedge, but we broke up out of the wedge, and so now we've been on our way up. And we had a few rejections of this first of this level, which made sense to me because this was our overhead channel resistance, and we've broken through, decisive breakthrough yesterday, and then a lot of follow through today. And so a lot of people are thinking, hey, the time for yields to keep going up is near. Right about this level, approximately like the 175 level to 180 level, in between there is kind of where we're watching to see if we can get above. But what you'll notice is that I've got this descending blue line, and I've talked about this a lot, but I'm once again going to zoom out and show you how this trend line goes back into the 80s. We've got these cloned trend lines which show you our levels that we have. So as we zoom in, again, still on the weekly chart, I'm going to actually lighten this up. We don't need to have this darkened. You can actually see that we got a clean bounce off of that line. And so my suspicion, my hunch, is that we don't pop above that. Oh, something's wrong with the chart there. Try to get out of this, do something a little bit different. It's like not loading properly. It's so strange. But you can see that maybe I have to just refresh my page. But basically, you can see how we're coming up on. Oh, there's my DXY chart. To that level, it's going to be an important level. I see something is just so wrong with my chart. That's a little bit better. Something is still off, but you get the idea. I'm not really sure. I've been having some trouble with TradingView lately. But yeah, so we have not retested this break yet, so it wouldn't surprise me at all to see price come back down and retest before coming back up. But the long story short is I do not think that we are going to get a breakthrough of that level. And the reason why is so weird. The reason why, oh yeah, no, that's right, that's correct. The reason why is because of that long-term downtrend. I have my doubts that there will be much of a change in Fed policy that's going to allow yields to go up. They can't allow yields to go up that high. Because it's a risk to the equity markets. They're counting on low yields in order to continuing to print money in order to sustain the economy. That's just where we're at. So I just don't see. I mean, I could see us bouncing up here, like bouncing off of this trend line, but I don't see a sustained breakthrough. And if it did, then I can't imagine that the Fed would let it go up past the 2 level before taking really, really decisive action. So a lot of people To me, this looks a lot like what we were seeing over in this area because people were saying basically for most of the first part of 2021 that we should expect a taper. People have been talking about tapering for a long time. Um, and so I always looked at, because of the price rise in this area, I looked at this as people were trying to front run the taper announcement, which never happened. And then because it never happened, we had this long sell down and then a consolidation period. And then it looks like people once again are front running what they expect to be a taper in November or December. But I don't think, maybe they'll talk about it more in December. I just don't think it's going to be on the docket in November. I don't think that the markets will allow that to happen. So that's what I'm seeing there. And then on the S&P 500, we'll start with that as far as the equity markets are concerned. We had some pretty good days this week. If I go to a weekly chart, see here we did finish green after a uh, pretty significant down week last week. And um, what we are looking to do, though, before the S&P shows that it's going to continue its uptrend without going through a major correction, is you need to see it go above this trend line, which is the line of repair um, that that we talk about in CTM. We make these lines of repair, and those are the first opportunities for entry. And so you have to not only break this trend line and then resume off, but you also have to clear this area because that will create a new higher high. So we have to make a higher high than this in order to see that follow through on the trend to the upside, which coincides with, that's why I put this red line. That's probably the resistance level horizontally to watch right now. But we did get close to this trend line and kind of rejected down. So you can see here, because of the red wick, we actually did come up over the last 24 hours and have since sold down. But we are resting above this support level, which actually I think is a little bit off. So I'm going to have to fix that. So you can see that right there. Um, and so I'm holding, I'm on the sidelines on the equity markets like the S&P because I'm just not certain where yields are going right now in the near term. And I'm not seeing the higher high yet and the breakout of the line of repair. And the same is true on the NASDAQ, although on the NASDAQ, to me, that the NASDAQ doesn't look as good because our high right here, this little bounce. So again, we had some big sell down days. This was on Monday. We had a 2% down move. Last week we had over almost a 3% down move. And to me, the concerning thing is that the NASDAQ tried to come up the last 2 days, and we could not close above the closing or above the closing low of this September 20th candle. I was looking to see if we could get above that. It's not the most important thing, but um, we're just not having the same kind of upside momentum that the S&P is seeing. Not the same type of repair that we're seeing. And the same thing is true here on the Nasdaq. We got to get above this and retest it and resume off, and then we have to clear this line right around here in order to get, what is that, around 15,400 in order to make a higher high. And until we do that, again, sidelines, that's the place of power. That's the position of power that you would want to be in. And then going to the Dow, this is a little bit better depending on how you look at it. If you compare it to what's been happening to, let's see if I can do this really quickly. So yes, let's try to do this. And then let's add also the NQ. And the reason I'm doing this is because I want you to just kind of see what the Dow has been doing. The Dow's, obviously the Dow was underperforming on a lot of these dips, but the Dow is actually in a much better place than the S&P and the Nasdaq. Let me go back to candles. That didn't really help as much as I thought it would, so I apologize for that. But the reason why I say that is because this line of repair, we broke through and we've retested it, and we held above this line. And so I'm looking to see over the next week if we can get, first of all, can we make a higher wick than the wick on this October 7th candle? And then can we get higher than this September 27th wick, which is not, there's not a lot of distance there, so it wouldn't be that hard to get above that. And then obviously this horizontal level, which is at 35,050. So I think it looks better on the Dow. And then the other place, though, depending on how you look at it, this is obviously the more aggressive line of repair, but this is the line of repair that's made from making our that's made from the highs, from the all-time highs, and so this is a lot more flat of a line. So the better position, I mean, you could still get a pretty good move out of this, but the better position would be to wait to get above that line, come in for a retest, and resume out. So if you're going to be on the equities, then the Dow looks better at this particular point, in my opinion. Um, the Russell is just more the same. I'm getting kind of tired of talking about it, honestly, because the Russell has just been continuing to be in this consolidation sideways. I brought up previously just the concern that um, because of the amount that the S&P and the Dow and the Nasdaq have moved to the upside since the Russell has been in this trade range, with the Russell not making an all-time high since March 15th. Um, and I've said this before, I'll repeat it again, that if that there's one of two things are going to happen. Either the S&P, Nasdaq, and Dow are going to correct to the levels that the, you know, down in terms of percentage, the 15 to 20% that they have increased since the Russell started going sideways, or on the flip side, the Russell is going to, that we're going to get some event that causes the Russell to break out, and then the Russell is going to be on fire, and is going to have a lot of catching up to do, very similarly, very similarly to what happened over here. Um, Most of 2020, the Russell underperformed, kind of came into this into this little sideways range here, and then suddenly breakout, retest, and then boom, and then it outperformed between November and February of 2021. And so that could totally happen. But again, it's not going to be, I mean, we have to get the Russell above this level right here, about 2360. Got to get above that in order for that to even be a possibility. And until something changes, I just don't see how the Russell's going to do it. So I'm not optimistic about that, and I'm not married to any particular views. So I'm just waiting to see. This is another reason why I'm on the sidelines on the equities, because the Russell has been lagging so much. It has not been confirming what the other indices are doing, and so that is concerning to me. Gold is also still just concerning from the standpoint of in our current backdrop with inflation supposedly running hot. Gold and silver are not taking part. In fact, today was very concerning because we got a really, really big wick up through this horizontal level at 1773. And then we almost sold near the open. We're only up 0.11% on the day. So that's not good. We ended up closing, like, even though we wicked higher to make a higher wick high than our close on October 4th, we closed below. We almost even closed below where we were at a week ago. And so to me, that's not a good sign. I think gold is on its way lower. Could be wrong, but that's what I'm thinking. Silver outperformed gold slightly today, but had the same kind of price action. And both of them are fighting these lines of repair that they have to get above. But the thing with silver looks like it has a much more obvious line of repair than, like some of the lines of repair that we've seen on the equity markets and the one that I have on gold. Um, but the biggest problem is, and I pointed this out, I think I pointed this out in my last video, look at all of the lines of repair, that supposedly broke, and we're still in the same place. I mean, like, how many lines of repair do we have to, are we going to have to break before silver actually, gets going and has the momentum to take it to new all-time highs? Um, I mean, honestly, anytime you can buy silver cheaper, or gold cheaper, it's a good thing. But I'm not excited. I'm not about to have to start moving this level over. This is kind of the level I think that, silver is going to have to break in order to be meaningful. Starting with first, obviously, this line of repair break and retest successfully and resuming off successfully. Um, the one thing that, again, we learn in CTM that I want to share with everybody here is, if you're going to take trades out of the line of repair, you have to take all of the trades. You can't take, just think about what this looks like. If you took this first one, and then maybe you got stopped out, or maybe you're still in the trade or whatever, and then you took this one, and then you got stopped out. Once we break this, you better take this one if you've been trading all of these other ones, because this could be the one that you miss. And you have to manage your risk accordingly. You have to know where to place, if you have the entry, you have to know where to place your stop loss, and what your risk is. And, if you're willing to take those small losses periodically, on these lines of repair, then eventually you're going to get a really good move, and it's going to make the small losses that you ate, it's going to more than make up for that. So that's the principle you have to always have to work with. Let's take a look at Bitcoin. I talked about this a lot last week. Bitcoin has broken through its line of repair. So we had this first wave coming out of the mid-cycle low, the line of repair, something like that. Obviously, that was a really bad line. It was something like that. So we broke out of it. And so that was the repair from the wave one correction. And then getting above this trend line, again, shout out CTM. We've been following this on CTM from the beginning, and all throughout this rounding top and the mid-cycle low and the wave one. This was our line that we have been looking at in CTM for the confirmation that wave two is beginning. And so that's obviously a good sign for Bitcoin, trading above 54,000. And usually, and I think we've talked about this before, but in CTM at least, but usually once you repair out of the first wave, you usually will never see this price again, or this price again after we successfully test it and move off of it. So that's something to watch for. I think we're looking pretty good on Bitcoin for a finish to the bull phase happening here in December. And I'm thinking, let's see if I can get this correctly. Kind of the area that I'm watching for is, see, here's December, somewhere around here. In mid-December, that's my target, and my price target that I'm looking at is somewhere around I should actually move this up, because I'm looking somewhere around the 260 range to 270 range. That'll be the place that I'm watching for price to peak out at. Totally possible in the time that we have. And if you don't think that can happen, then just, look no further than the previous cycles, and the way that price moved into its peak. And so totally possible, not something that you can just discount. And then the last thing I wanted to do is I wanted to take a quick look at sectors. I haven't really looked at sectors in a good while. Interesting, considering how long it's been since I've looked at the sectors. Here we are on the real estate sector, right in this range, looking like we have a line of repair right there. Consumer discretionary, also sideways during this time. So I'm actually going to, make that one red, and then this one yellow, because that's my sign for um, uh, bullish, bearish, downtrend, uptrend, things like that. Um, Here, this is really interesting. So this is the healthcare XLV, and we have a pretty steep line of repair right here, and where we've barely bounced off of this support level. This is probably actually a really good spot to potentially buy if we can settle on this level. If you're into buying um, uh, ETFs, sector ETFs. Um, wow, we've got this looks really bad on utilities. Let's get these lines darkened out. Yeah, so we're in a sideways range on utilities. It does not look very good in my opinion. We've made a lower high here, and it looks like we could be on the way down in utilities. Let's see what happens if we extend this line over. I don't know. Get rid of this. XLK, this is the technology ETF, and this is looking, I mean, this is basically going to follow what the NASDAQ is doing, and so we have a very similar uh, structure of repair that needs to take place here in order for this to become more attractive. So we're going to put that one red. We've got the XLP, that's the consumer staples. Turn that into resistance and get rid of this circle. Um, Again, another situation where it actually looks like if we can rest. Well, actually, no. This is a sideways channel. We're stuck right here, so we got to get back above this resistance level before this looks attractive as a place to be. So that's going to be actually yellow still. XLI. Let me move this down here. XLI Industrials. This is not the most attractive place to be right now. Industrials, especially with, well, it's interesting, supply chain shortages and things like that. I wonder if that's going to end up being bullish in the long run. Communication services, this kind of reminds me of the technology ETF, which is the XLK. Communication services on the verge of breaking out of this downsloping consolidation, but not great as it is right now. So I'm going to hold out judgment on that one. I'm going to keep that one yellow because that one looks like it's pretty close. XLB, this is the basic materials ETF, and you can see that line of repair. We're still sideways. I think I'm going to adjust this because the market looks like it's respecting that level a little bit more. Not looking good there. Energy. Energy is, ooh, interesting. Energy is on the verge of breaking out of this sideways consolidation that it has been in. And actually, if you go back and you look at WTI touched over 80 for the first time in how long has it been since WTI was over 80? This would be back in 2014. So we're getting to a level that we haven't been to in a while, and sorry about my chart, it looks crazy. Get rid of some of these things. I'll have to clean this chart up at some point. But the point being that with WTI on the way up, it's a good sign for energy here. I'm actually going to make that one, I'll keep it yellow for now until it breaks out. I won't make it green until it breaks out of there. It's a really good sign that XLE is actually following WTI because there have been a lot of situations where XLE has lagged WTI. And so even though oil was really, really hot, you did not see the oil names, the energy names like Exxon, Chevron, etc., performing very hotly in spite of WTI moving. So that's a pretty good sign there. And then here it looks like, yeah, interesting. So if I adjust that line, see, this is where you have to be really flexible with your lines because do I trust that price has, that this is showing a breakout because price has technically broken to these levels 2 or 3 other times, and we still haven't seen a sustained move up here yet. So on the financials, I'm going to move this up to account for the fact that we continue to get bounced back downward. So since this is still sideways, I'm going to keep that yellow. I'll be looking to see next time if we can get above here and move up. And then we'll take a look at growth versus value. Um, wow, interesting. So you could see that I've marked a whole bunch of these places where we, uh, these important trend lines. It looks like now this is our new trend line. We have not made a higher high on growth versus value. It actually looks like we've made a lower low compared to back here in beginning of August or early August. And so what we'll be needing to look for is maybe I'll put a line here, do that. Can we make a higher high, or will we continue to make lower lows on growth versus value? And if value starts to outperform growth again, like it was towards the end of 2020 and into early 2021, then that's where you're going to be looking at your value stocks, your materials and let's see, materials, and then energy, financials, and industrials outperform a lot of the others. So I think that they're able to take advantage of the fact that yields are getting higher right now, and so that's my look at the market. Hopefully this was interesting for you. Look forward to watching the markets next week and seeing where things are at. At that point, go ahead and like this video if it was helpful or interesting to you. Share it with somebody who you think might find it helpful. And thanks again. I'll see you next time.